Some questions about that order backlog at $73 billion. Also, Hock Tan not giving a lot of clarity about the guidance moving forward in the near term. But you actually think that, according to your most recent note, you think that backlog number is very bullish for the company and you see more upside. Explain the thesis that you're seeing when a lot of other investors seem to be selling the stock.
Sure. I think if you look at the backlog, that was through, if you annualize it, it's basically almost $50 billion for next year. That's on track to where we are right now. I think the sell side consensus was only about $38 billion for next year. So this is definitely ahead of that. And I think, as Fox said on the call, this is just the minimum, right? There could be upside to that backlog order going forward over the next couple months. I think the other very positive takeaways, the AI networking, I think, is a big theme. If you analyze the networking, the part that's more than 20 billion, that implies next year it could be about 13, and that's considerably higher than I think where most people are for the networking part of the business.
All right, so you're focused on the networking part of the business. You also call that bullish. So you're talking about their fourth customer, Anthropic, placing additional orders, and then there's also a fifth customer that wasn't really named. Who do you think that fifth customer is, and does it matter who the customer is or how much they spend?
Yeah, I mean, I think, the initial size of the order is not that big. It's $1 billion by the end of next year. They haven't disclosed who that is. I think they have highlighted it's a potential, data center customer. There aren't that many out there. So I think there has been some press reports about Microsoft potentially being that customer. So we think that would be represent a very large customer as well. I do think that there was a lot of emphasis on OpenAI as well, but in our view, it's not that important next year to their earnings. We've seen very positive, supply chain from TSMC. So that's one of the reasons we've been very bullish in the last 3 months. We've seen a significant upper revision at TSMC's order capacity as well.
All right. This stock's gotten a bid because it actually helps Alphabet make their chips, their TPUs. But at the same time, a lot of concerns about what's called customer tooling, the idea of customers making their own chips and maybe even cutting Broadcom out of it. You're one of the more bullish analysts on the street. You got a price target of 535. The street consensus is at 442. Does that mean you're not concerned about that at all?
Yeah, so that's a good question. I think the reason people start to see some concern is that if you look at the TPU project, next year, MediaTek in Taiwan will have a TPU project with Google as well. But I think if you look at the scale, MediaTek's project is probably only going to be a couple 100,000 units, whereas Broadcom's going to ship well over 3 million next year. So the scale is not even similar. But I think what's interesting to take note is that if you look at Amazon, Amazon has been doing a lot of the front end portion of the chip themselves. So it's a different model than what Google so far has chosen. But the performance of Amazon's Trainium definitely has lagged behind the TPU, which at this point is pretty much 100% done by Broadcom. So I think there still remains debate, in terms of the performance of doing the front end yourself.
Frank, one other question for you. We were showing the valuation of both Broadcom and NVIDIA. If you look at Broadcom, it's trading at about 45, 46 times forward earnings at a significant premium to NVIDIA. Could we maybe just be seeing investors react to the valuation on this company as we've seen with other earnings reports? Because it was generally a very good report. You seem to think so. I think a lot of people thought the report was good. It seemed to be the call that changed the sentiment.
Yeah, I think basically a couple of things around the valuation. It does look optically more expensive, but I think there's two ways you can look at this. Number one, I think the earnings in general still need to go up. So I think most of our peers will have to take their numbers up next year and even the year after. So the valuations won't look as expensive as it does today. The second part is that arguably, the multiple does deserve to trade higher, maybe even than NVIDIA, because if you think about the customer profile, they're being underwritten by tier one hyperscalers. NVIDIA's strategy going forward is going to start to move to more enterprise, neo cloud, and sovereign, where there's less comfort around the CapEx spend there. So I think that's why you're going to see probably this valuation gap difference continue to exist between the two.
Okay.